That is simply fantastic. And we've never seen anything like this where you can just totally disregard a mortgage payment. This is a truly a game changer. So, what are the specific qualifications? Let's just a seller may say, okay, what do I need to qualify? Do they need to just get pre-qualified for the new home first, and then give the 2,500, or how does that work? Explain that.
It's a good question. In my experience, what we've done is when the buyer comes and says, okay, I've got a contract for a $400,000 home, but I have my house selling for $200,000, so I don't qualify because of the payment. But we run the numbers, disqualifying that amount, that mortgage payment, taking it off the books as if it didn't exist, and see what they qualify for. If she qualifies for the $400,000, then I will explain to her the situation on how we can do this backup offer, guaranteed backup offer for her, and have her get in contact with my investor. Well, aside from just being able to buy their dream home, it's just waiting for the house to sell to get all their money. But normally it's the opposite. You have to sell it first, get your money, then buy the house, so that we can say, okay, now they qualify. In this case here, no, you can buy before you sell.
So if that customer is waiting, or that seller is waiting to sell their house in order to buy their dream home, as Art just mentioned, okay, well, did you want to wait 6 to 9 months, or did you want to go ahead and take advantage of this program that we have?
Welcome to T Sing Wealth Builder Podcast. I'm Tamara Cody Singleton, your associate broker with Century 21 Integra. As the queen of the South Side, I'm here to guide you through San Antonio's real estate market. Together, we'll explore strategies for buying and selling your single-family home so you can start building generational wealth through real estate. Join me each week for insights and inspiring real estate journeys.
Welcome, everyone. I am Tamara Cody Singleton, your associate broker here with Century 21 Integra, and the queen of the South Side, dedicated to building generational wealth through real estate and fulfilling real estate dreams, one home at a time here in San Antonio, Texas. And today I am absolutely thrilled to host two incredible experts from our partner that I deeply, truly trust, Art and Ray Saldana of NewFed Mortgage. They're here to kind of put you all at ease about the current real estate landscape in our vibrant San Antonio market and shed some light on two truly game-changing programs that can offer significant advantages to both buyers and sellers, especially our cherished military veterans and those looking to get into the new home construction market. So Art and Ray, thank you so much for joining me today. And we want to, yes, for sure. My pleasure. And so we do want to get straight into it, the San Antonio market, the landscape. So Art and Ray, from your perspective at NewFed Mortgage, what are the most significant trends that you're seeing in San Antonio real estate market now for both buyers and sellers?
Ray, you want to share on that? Start us off?
Sure. I just got off a call, actually, so it's kind of fresh on my mind. So we're seeing a lot of home buyers right now that are just not scared, but they're like timid as to, should I start looking to shop? Should I get into a home? You hear the chatter of interest rates dropping, etc. And right now, guys, it's a perfect time to go into a home. Right now, the prices of homes are lower, and because the rates are higher, right? And they're not that much higher. They're at, you can get anywhere between 6 3/8 to 6 3/4, depending on your credit score and on your type of loan that you're wanting to get, whether it's FHA or conventional. But the minute that and this is something that has come out from the San Antonio Board of Realtors, is that we're going to start to see an increase in sales prices. So that's going to make it more difficult for the consumer to get into that home, because now rates are lower, but guess what? The price of the home is higher. Or right now, the prices are lower and the interest rates are higher. So it changes the momentum of your buying power. The sweet spot right now, from what they had disclosed, is around 350 and 350,000 for sales price in San Antonio. Again, it depends on the side of town that you're looking at. Also, down payments. There's a lot of down payment assistance programs that are available through the state, depending if you qualify. And so, I mean, it was a lot of information, great information. It was eye-opening to a lot of folks that were on the call. And I mean, I don't know if that's more what you were looking at, and for
Yes, exactly. Yeah, that's exactly what I was looking for. Like, what's the feel of buyers? How are they feeling? Are they timid? Like you say, they may be timid, but to your point, if they wait until interest rates go down, then you have to contend with all of the other buyers out there, and now you have more of a seller's market. Would you say it's more of a buyer's market right now, even though the interest rates are still high?
It is a buyer's market right now, definitely, especially because, and one thing I always tell a consumer or a buyer is, okay, because they hear, oh, my mother, my father, my sister, my friend, if they bought a house when it was 3.5%, okay, but that was during COVID, and so back then it was a seller's market. Sellers were selling their houses for, way above asking price. And now unfortunately, it's sad to say, those buyers are now upside down on their homes because their homes are not worth the price that they paid for it. So I always tell, I just got the phone a little while ago with a consumer, and I said, okay, she's shopping around. I said, what is your pain point? She goes, well, I'm looking at interest rate. I said, okay, are you a homeowner right now? She said, no. I said, okay, so are you paying rent? She said, yeah, I'm paying $2,000 a month. Okay, so you realize you're paying 100% interest rate, right? And she's like, what do you mean? I said, you're comparing paying rent to a mortgage payment right now. What are you comparing it to? You're paying 100% interest rate. And where I'm quoting you right now, 6 3/8. And she's like, oh, well, when you put it that way, yeah, you're right. I said, so it's because they hear the chitter chatter of everybody who bought a home when it was 3.5%, 4%. Well, we're not in that anymore.
Right. So Art, let's bring you into the conversation. What advice would you give buyers in how they should approach financing their home purchase strategically in this market?
Well, I'm going to give you a little scenario that I did with one of my past friends that had been asking about buying a house. In the last couple of years, I had her pre-qualified for $325,000, and she kept saying, "No, I'm waiting for the prices to come down. I'm waiting for the prices to come down." And I told her, I said, "The prices are not going to come down." My analogy with her was, she owns a donut shop. Okay, I said, "Okay, Danny, here's what I'm going to do. I am going to ask you today, what's your price on your donut, and you're going to sell it to me for $1.75. Okay, big old jelly filled, whatever it was. Okay, eclair." And I said, "I'm going to come back next month or next year, and I want you to sell me that same eclair for $1.50. She said, "No, next year it's $2.25. That's exactly the way it works with the prices of the houses. The prices are not going to come down. You may have overinflated the price, or you paid extra on that house, like Ray mentioned, and instead of paying the $300,000 that was asking price and the appraisal value, you went ahead and decided you were going to pay $325,000. That doesn't mean that later on, when you're going to sell, they're only going to give you $300,000 because the prices came down. No, you overpaid for that house. So that's what happens. And right now, that is the mindset of the majority of these buyers, is that I'm waiting for the prices to come down and I'm waiting for the rates to come down. Well, as Ray mentioned, rates have come down just a little bit, hardly anything at all. We're hoping that next week we'll see another, a drop again, and if so, that'll be, add a little bit more comfort here to our buyers. But in reality, prices coming down, I don't see them coming down. Maybe they'll stabilize, okay, to where they should have been, according to the values. But to say, well, that house isn't worth anything anymore, it's got to be a 50, 100-year-old house, dilapidated, and it's just rubble in order for somebody to say that ain't worth anything. But in actuality, the whole footprint, the whole skeleton of the house and everything is still worth what it was appraised for. So that's where we're at. I would suggest let's take a look at the house, buy it now, whatever the price may be. And when the interest rates come down, I'm sorry, whether it be a year from now, 2 years, if the rates come down, then let's refinance it. But you capitalized on the price of the home now, a year before, 2 years before. And now you're able to say, okay, I've dropped down so much equity. Now it's a matter of dropping down the interest rate. That would be my advice to them. But
So let's talk about sellers then, because you mentioned equity. What advice or strategies would you give to sellers, because you work with buyers all the time and you see the contracts, right? What advice would you give to sellers in order to ensure that their home can be a ready-to-go product for a buyer? What are lenders saying these are the must be repaired requirements? Lender required repairments. What are they, and what are you seeing?
That's a good question. Typically, your appraiser is going to be looking at three things. I look at it as the three S's: structural, safety, and sanitary. If there's anything in that house that affects any of those three words, the appraiser is going to ask you to repair that. Okay? If the paint is coming off the walls, the first thing they tell you, well, is that lead-based paint? Well, I don't know. It could be. All right, well, then let's paint it, recover it. That wood is rotting. We need to replace it. The electrical system is not functioning correctly. Get it taken care of. There's mold in the walls. Well, let's get that taken care of. Little things like that, they're going to be asking for. Now, you got to put yourself in the position of the buyer. You go out and you look at a house, you see it and it has all these little defects here and there. You're not going to want to buy it. So that means that the seller can't sell. So in putting yourself in that situation as being a buyer, you're going to look at it from the buyer's perspective and take a look at your house and say, okay, yeah, I got to fix this. I got to fix that. I got to do this. I got to do that in order for me to sell. So you have to keep an open mind. You can't just say, well, that's just the way it is. Most of the time on a conventional loan, the people will tell you, well, on a conventional, it's as is. Well, guys, you got to remember one thing. If the appraiser says there's structural damage, safety, and or sanitary, they're going to ask you to repair it. I get it. People always say, well, FHA requires so much more. Yes, they probably do. But if those three S's are brought up on that appraisal, regardless, it has to get done. And people don't realize that. Well, it's as is. Well, it's as is. They don't want to buy it.
So that would mean that it would behoove the seller to go ahead and get those things done prior to listing.
Correct. Yeah.
Great.
And I can, if I can piggyback on that as well, I agree with Art with the three S's. I just got off the phone again with the seller, or actually with the realtor, and he said, hey, I'm getting ready to list this house. The seller doesn't want to do any repairs on it. And I told him what Art just said. And he goes, well, he wants to sell it as is. But he has a veteran that wants to buy it. I was like, again, if it's those three S's, I said, he's got to remember, I said, and I told my realtor this, ask your seller when he bought it, were the items that he doesn't want to do, were they there? And if he says no, which I'm pretty sure he's going to say that, then you want to sell it the way you bought it. And if he was a buyer, would he buy his house? And he's like, you know what? You're right. So I think that answers, some of these sellers' questions. I mean, and then there's some sellers that say, "Oh my God, my house is worth, 500,000." Well, it's not, because just because it was like that back when you bought it 2 or 3 years ago doesn't mean it's worth now because you overpaid for it.
Right. It is a different market now. And what we could have gotten away with lower interest rates, we just can't get away with now. And so, speaking of that, and having sellers prepared to receive offers, let's go and talk about one of my favorite programs that you all have at NewFed, and that's the Guaranteed Offer Program. Can you explain how this works for both buyers and sellers, and why it's such a powerful tool to have in this competitive and uncertain market?
Definitely. That's a good point. The guaranteed backup contract, the offer that we have is uh, many times realtors have a buyer that are wanting to purchase a home. And the situation that they are currently in, owning a house, they're in the process of selling it. We as a lender have to qualify them with that debt. And having that mortgage payment disqualifies them for qualifying for the house that they want to get. So say for instance, they've got a $2,000 mortgage payment and they want to buy a house that the mortgage payment is going to be about $3,500. Well, because they have a $2,000 payment already, they won't qualify for the $3,500 that they want to buy. So if they get rid of that $2,000 payment, then they would qualify. Now, the program that we have that you just mentioned, the guaranteed backup contract, is this. If your seller is in the process of selling the house and you've got it listed with them, continue with the listing. I will get my investor to give them a call, see what the actual value is of the house, and we will offer that seller up to 85% of the value. Okay? To keep it simple, if it's $100,000 value, we will give them $85,000. All right? Now, let's say they are selling the house. You have it listed. You've got a 6-month process to sell that house. All right? It's going to cost your buyer, the seller, $2,500 one-time fee to get that contract backup offer for us. What that means is that if they provide us that contract, that guaranteed offer, we will discount that $2,000 payment as if it didn't exist, because now we're going to show that that house is sold. Okay? Now, in reality, again, you've got 6 months to sell it. If you sell that house within the 6 months, the seller gets their money, 100% of what they got, and they don't owe anybody anything because they already paid that one-time fee of $2,500 to my investor to take those numbers off of our credit report, our qualifying. Okay? Now, let's say the house does not sell in those 6 months. My investor now is going to take over that house. They're going to give your seller the 85%, the value that they agreed on, and they're going to put that house up for sale. They're going to put it up for another 6 months. If they sell that house within those 6 months, whatever amount they get over the 85% that they paid for, minus any cost that the investor incurred, they will give that money back to your seller. Okay? So it's a win-win situation. This way, they didn't miss out on that house they wanted to buy, their dream home, and they still were able to sell the house without having to wait for anything but just buy the house.
That is simply fantastic. And we've never seen anything like this where you can just totally disregard a mortgage payment. This is truly a game changer. So what are the specific qualifications? That's just, a seller may say, okay, what do I need to qualify? Do they need to just get pre-qualified for the new home first and then give the $2,500, or how does that work? Explain that for me.
It's a good question. In my experience, what we've done is when the buyer comes and says, okay, I've got a contract for a $400,000 home, but I have my house selling for $200,000. So I don't qualify because of the payment. But we run the numbers, disqualifying that amount, that mortgage payment, taking it off the books as if it didn't exist, and see what they qualify for. If she qualifies for the 400,000, then I will explain to her the situation on how we can do this backup offer, guaranteed backup offer for her, and have her get in contact with my investor. The investor evaluates the house and says, we'll give you this money, we're done. They don't have to qualify with the investor, nothing like that. As long as the house holds the value, that's what they're going to base it on.
The only thing they do, they have to qualify with NewFed. In other words, they can't go to XYZ Mortgage and want to take advantage of this. This is a NewFed relationship that we have.
It's an
So
exclusive.
I had a realtor call me. They're like, hey, we want to talk to you about this, but they have their loan at XYZ. I'm like, that's not going to work. They have to have their loan with us. They have to be qualified with us, and they got to close with us. We're not going to do it for another lender. That's number one. Number two, if they don't need the assets or the proceeds from the sale of this home, and they can get their money out of their 401k or get a gift or wherever, and then once their house sells, they can pay that, back to their 401k, then this will work. But if they need the proceeds from the sale of their home in order to buy, like they need their down payment and closing and all that, this is not going to work either. It's only if they have their funds on their own already from a 401k or from a gift or in their checking and savings already, this will work.
Oh, okay. So that is very, very important too, because a lot of people are depending upon the proceeds from the sale of the house. So that, I'm glad you said that. So what other type of benefits would a seller have from going with this this guaranteed offer program, other than being able to have the mortgage just set aside in order to qualify for the new home?
Well, aside from just being able to buy their dream home, it's just waiting for the house to sell to get all their money, which normally it's the opposite. You have to sell it first, get your money, then buy the house, so that we can say, okay, now they qualify. In this case here, no, you can buy before you sell.
And will they still be able to take advantage of down payment assistance programs, even though they're qualifying for?
Well, here's the thing. The down payment assistance program will tell you, have you owned a house in the last 3 years?
Mm-hmm.
And you're a current owner. So that's going to be a hard thing to swallow there. Okay.
Yeah. Okay.
Now, the other thing is there is a program that we have with the down payment assistance program that, yes, you can buy the house as a first-time home buyer, provided that it sells simultaneously to you purchasing the new one. Well, in this case, the house hasn't actually sold. It is not off the market. And 3, it is still under your name. So that is still considering you as not a first-time home buyer.
Right. Okay.
And right now, I mean, just again off the call that I was on previous to this, is houses right now in San Antonio are averaging on the market, the sellers have their house on the market averaging 6 to 9 months. That's a long time. Unless they're in a, sweet spot price, then their house goes quickly. But right now, houses have been sitting on the market between 6 to 9 months. So if that customer is waiting, or that seller is waiting to sell their house in order to buy their dream home, as Art just mentioned, okay, well, did you want to wait 6 to 9 months, or did you want to go ahead and take advantage of this program that we have?
Right. That's a selling point as well. So what's the average, or what are you seeing more, FHA mortgage loans or conventional or VA, because this is Military City, USA?
We get a variety. Everything's coming in. Now, I will tell you this. In regards to doing this guaranteed backup contract offer, it has to be purchased under a conventional, because conventional is the only investor that will accept this backup offer. They're the
Very
only
good
one.
point.
The FHA will not.
And
Okay.
with conventional, we do know that you have to have certain qualifying credit scores, correct?
Correct. Just like every program, yes.
Okay.
The thing about it is that the 3% that you were putting down as a first time at conventional, you won't be able to do 3%, but you can do as little as 5%, which is still really good. Okay. And the thing about it is that if you have an FHA loan right now, you can't buy another FHA. If you
Right.
have a VA loan, you can't buy another VA loan unless you qualify, and then that's another world, another different type of program there. But a conventional doesn't matter if you have an FHA or VA loan, you can buy another house provided that's not showing on your record, and that's what they want. So conventional will accept it.
Well, okay, so considering that my niche is new home construction in land, tell me how we can combine the guaranteed offer program to make it work with new home construction.
Okay, that's a good one. Typically, your lender, which is going to be your builder's lender, will not have this program. So they have to count that mortgage payment.
Hmm.
Okay. They will not go under contract. They will not start building the house because they cannot qualify. That's where we step in. We become that second look lender for them. They've got this mortgage. We have this program. We can eliminate that payment. We can qualify. We can issue them a letter of approval. In doing so, the builder now can start building the house without the buyer having to sell theirs.
Okay. All right. So that's an easy segue, right, into dealing with our military veterans because a lot of them are retiring and they have retired, they're veterans, and they're looking to get out of the city and buy land and do the dream home via new home construction. So, what's your expertise in handling VA loans?
VA loans is a great program. We do a handful of those regularly. Those are really good. My hat's off to all these veterans who serve their time and deserve these type of financing. It's the best thing. If you're a veteran, I myself will always say, let's do it. Especially if this is going to be your forever home, take advantage of that zero down payment. But if this is not going to be your first time or not your forever home and it's going to be your first time, a lot of times I will have them do maybe an FHA or conventional so that later on, if they want to do the zero down payment, they've got a whole bunch of equity come from their current home and they can retire on that forever home that they're going to get. That's my thing because most of the times these people go in with a zero down payment, they use up their entitlement and the house is tied up and they can't get enough entitlement left for the new home. So they have to put some additional money down. That's the reason why I tell them, hey, you want to get rid of that home, release your entitlement to get enough to get that $500,000 home you've been wanting all this time. But it's the same thing. If they don't have a VA loan, if it's a conventional or FHA, or even if it's a VA, and they want to buy under conventional, they can. But going VA, government loans, they won't allow it. Not for the guaranteed backup contract.
And that's understandable. That is totally understandable. So, Miss Ray, what are 2 to 3 pieces of advice that you could give our clients here in San Antonio who just are just starting out on a real estate journey, whether they're buying or selling? What advice could you give them?
Number one is get pre-approved first. I just unfortunately had to bust a bubble with somebody a little while ago because she went out looking for homes, her and her partner. And she's like, I want my realtor to show me houses. And the realtor's like, no, you have to get pre-approved first because we can be shopping for, a $500,000, $400,000 home and you only qualify for 200,000. Your time is very valuable. Everyone's time is valuable right now. And so that's my number one thing that I always tell everybody, get pre-approved first. It's like going, as women, you go into a shoe store and you see you need a black pair of shoes. Which ones do I get? Same thing. Which kind of loan can I get? What do I qualify for? We have over, 184 loan products that we have. Which one is it going to be? What is going to be best fit for me and my family, my financial monthly obligation. And so when I started going over numbers with her, and she was like, "Oh, I thought the payment would only be this." I go, "Well, again, they're listening to mom, dad, cousin, everybody that bought a home or that they put 20% down and they don't have to pay taxes and insurance in their monthly payment. All they're looking at is this principal and interest. Well, taxes and insurance are included in your monthly payment. So that makes a big difference when you're looking at a monthly payment. It's not $1,200, it's $1,800 or $1,900 a monthly payment. So get pre-approved first is my number one thing. Number two, if there's any, let's say, I had another customer that says, well, I'm looking to buy until 6 months from now, but do I need to get pre-approved right now? I said, well, how's your credit? She said, well, I may have some things. Right now's the time to check your credit. Let's work on those credit items. And if there's something that is on your credit, we here at NewFed will offer you a credit plan that we will put you under that will help you get that credit score up. So another customer, we talked to her, probably 6 or 7 months ago, Art, and she had a 540 credit score. And guess what? Now she's got a 714 credit score because she followed the credit plan that we gave her. She followed exactly what we told her to do, pay down some credit. She thought she had to pay all these credit cards off. And I was like, no, this is all you have to do, get under a certain percentage on your credit card. And then now she qualifies for down payment assistance. There's just so many doors that open for her now that she's at a 714 credit score. So she's super excited. She was crying on the phone. And I was like, you did the right thing. She was, I'm so glad I talked to you. Because I thought I had to wait. I said, if you would have waited 6 months from when I talked to you a while back to start doing that, it would only further delay your purchasing and buying power time. You have to wait another 6 months or whatever it was. So those are the two things. Get pre-approved, check your credit, even if you're thinking about buying right now, maybe buying 3 or 4 months from now, 6 months, whatever the case is. And that way you kind of get to know how much money you're going to need for closing, what your buying power is, what type of program you qualify for, and then you'll know your credit score. Because we're right around the corner from, Christmas. People start going off and charging on their, credit cards. And I always tell everybody, guys, you buy a house right now in September, your first house payment will be November. You buy in October, your first house payment will be in December. You buy in, November, be January 1. You get a Christmas break there. They're like, oh, yeah, you're right. So it's never not a good time to buy. The time to buy is right now.
Yes, yes. And I always just I told my clients, please don't go shopping without getting pre-approved because you're going to get your feelings hurt, basically. And I don't want to see the tears. So thank you so much for sharing that and putting that at the top of advice. So go, Art, please.
One thing also, we get some people sometimes that come in here without realtors or just call us. My advice to them is get yourself a realtor. Have them help you. Have them write up the offers. Have them do their homework on those houses, those CRMs, find out what the values are, because if you go alone at this with the seller, there's no telling what you're going to get. The seller wants to sell the house. It's obvious. That's what it is. You want to buy a house, but you don't know anything about the transaction process. So get yourself a realtor that's going to help you with this. And that's a huge thing.
Yeah. And I always tell them, they're the expert. They're the expert in the home buying. We're the expert in lending out the money. You wouldn't want to go to, if you're not feeling well, you want to go to a doctor, right? They're the expert. You don't want to just go to Google and find out all these things that might be wrong with you. You want to go to the expert. Same thing when buying a house. Go to the expert.
You don't go to court without a lawyer either, right?
Exactly.
Yeah, it's been great. Thank you all so much. For agents and clients looking to connect with you at NewFed Mortgage, what's the best way to reach you and so that they can explore all these wonderful programs you have to offer?
Well, my cell number is 210-602-6040. Ray?
Mine is 210-241-5885. And one thing I do want to emphasize that we speak Spanish. So if you have any clients, I know we have a lot of realtors that don't speak Spanish, but we can help you with that. So don't feel like, oh my God, have a Spanish speaking client, I don't know what I'm doing, we can help you with that.
That's excellent, because I am one of those realtors that need that help. So once again, thank you so much, Ray and Art, for spending this time with me. I'm sure our listening audience have learned some valuable tips and tricks, and those new programs that's coming out, the guaranteed offer program, as well as the new construction program. I so thank you for sharing, and we have to do this again on another topic for sure.
Let's do it.
Absolutely. Thank you so much for including us. It was a privilege.
Really
Thank
appreciate it.
you. Till next time. Bye-bye.